Happy December, everybody. I'm Stacey Perkins, Vice President of Global Marketing for Legacy Education Alliance, and I'm once again bringing you our monthly edition of Legacy Connection, your connection to Legacy's most shared and engaging content for the month of December. Spanning from real estate and foreclosure investment to financial markets and currencies around the globe. It's so great to be with you. In this month's edition, we're discussing the role that emotion can play in our investing habits and a few tricks of the trade that just might help keep your investments in check. We will also be joined once again by Legacy Education Alliance's CEO, Antony Hunt, who explains why now might be a good time to consider foreign currencies as an investment opportunity. Let's get to it, shall we? When major unknown events occur, such as the unlikely nomination of a presidential candidate who was down in the polls, market prices tend to reset. So how does one decide on the best course of action with regards to the trades when this happens? On the latest edition of Investing Talk Live, Mark Justice discusses a very important type of analysis that can help investors who are faced with this type of uncertainty. Let's listen in.
Now, if you're unfamiliar with the concept of technical analysis, this involves looking at price charts, looking at price movement, and basing your entry and exit points on where you invest or trade based on what the chart is telling you to do.
Thank you, Mark. Indeed, having this sort of crystal ball that can hint at us when to enter and exit the market sounds extremely beneficial. But what exactly do we mean when we use the term price charts and price movements? Last week, we released an infographic titled Curb Your Market Sentiment. The main takeaway from that piece is that in order to succeed in the trading game, you must separate yourself from emotion. Those who fail to recognize that role that emotion plays in trading do not last very long. So how can you safely navigate the emotional waters of the market? Well, there's a certain indicator out there that can help you stay on course and is often referenced by investors in order to better gauge the emotions of the masses. I'm talking about the Chicago Board Options Exchange, or CBOE Volatility Index. The power of a proper financial education cannot be overstated, and the correct use of the CBOE Volatility Index can have a significant effect on a person's ability to stay competitive in the marketplace, even during major unknown events. Next time fear takes hold, don't exit the market prematurely or make rash decisions. Reference the CBOE Volatility Index and soak up the data, such as the rate at which investors purchase options for protection, a common tendency investors have when fear strikes. Okay, so are there any other strategies that investors can use to eliminate emotion from their trades? We posted an article on My Elite Portal a few weeks back that tackles this very question. Are you familiar with the dollar cost average strategy of investing? It involves buying a fixed amount of S&P 500 shares, SPY, at regular intervals. You do not reinvest the dividends and you never sell any of your shares. It is generally accepted that the value of SPY will go up over time due to inflation. So, when you combine the increasing value of SPY with the dividends you accumulate over time, you will receive a return on your investments. Most people who get involved in stock investing allow their emotions to dictate their strategy, and they fall victim to the volatility of the stock market. The great thing about dollar cost averaging is that it only takes consistency and the discipline to stick with it. Let's switch gears for a moment and check in with Legacy's CEO, Antony Hunt, as he discusses the potential for foreign currencies to add value to your portfolio. Let's listen in.
Hello, it's Antony Hunt, and we're going to give you another of our Assets Cubed minutes, and this time let's talk about how we can use currencies and their relative value to our advantage. As you know, if you've heard me speak or make a presentation on Assets Cubed, currencies go up, currencies go down. We use the concept of what I call mean reversion to highlight opportunities where we might use relative strengths and weaknesses in currencies to really give a little bit of a kickstart to our investing activities. And this year, 2016, later in the year as I'm talking to you today, the US dollar still has considerable strength against other currencies around the world. Now, it's not just the US dollar, because some currencies are tied to the US dollar. The Hong Kong dollar, for example, is just one of those. So what does this mean for us? Basically, if we can take our US dollars or currency equivalents and invest them elsewhere around the world, we'll be able to get more value than we might otherwise at this particular point in time. Now, what's a good example of that? Well, if you followed world news this year, you'll know that there was a vote, commonly called Brexit, in the United Kingdom this year, which has caused the value of the pound, because of uncertainty, frankly, to drop relative to the dollar and other currencies. That means that relative to the average value of the pound, if we were to go and buy British assets today with US dollars or equivalent currencies like the Hong Kong dollar, we can buy assets, most probably real estate or property, somewhere between a 13 to a 15% discount, just because of the relative strength of our currencies. That's quite a kicker to add to your portfolio performance. So, as you're looking at how you might allocate your assets and where you want to be investing, if you're holding US dollars or equivalent currencies today, I strongly recommend that you look at investing in other countries, at least with some of your portfolio, where you can really take advantage of the discounts that are available to us as dollar investors today. That's the end of this Assets Cubed Minute. Thanks for listening, and I'll look forward to talking to you again.
Thank you, Antony. The world is indeed more interconnected than ever, and it's also fairly uncertain. Put these two together, educate yourself, and there's no reason why your investing reach shouldn't cross international waters and borders. As we conclude this edition of Legacy Connection, I'll leave you with a quote we shared last week. Good things come to people who wait, but better things come to those who go out and get them. So go out there and arm yourself with the tools necessary to overcome market sentiments, global uncertainties, and more importantly, your own personal emotions. There's no place for them on Wall Street. I'm Stacey Perkins with Legacy Education Alliance. Thank you so much for watching, and we'll see you next time on Legacy Connection.